Hey everybody, it's John Gandy from your local CFA Society board. Pleased today to have John Eubanks from Park Sutton Advisors down out of Atlanta joining us today. He's going to be speaking to us in April on the topic of M&A evaluation and succession planning for the wealth and asset management industry. So John, thanks for joining us today.
Yeah, thank you. I look forward to it.
Yeah, absolutely. So we'll go ahead and dig in as we typically do on these promo videos. Just a couple of questions to kick off John's topic here. First one, as I read your topic, I was kind of curious, sort of an opaque market. What do multiples look like in the private wealth space, and what's been the trend here of late?
Yeah, so in general, it's a little bit of a difficult question to answer just because different acquirers and capital partners are valuing firms differently based on really their own strategy and what they're looking for. But right now, for the traditional wealth management firms, they're offering the holistic wealth planning offering in addition to investment management. A lot of those are really trading like 7 to 10 times EBITDA on the larger size firms. Smaller firms that are below 500 million in assets under management have been a little bit lower than that, but just depending on location and a lot of other factors there. Overall, valuations are definitely up pretty significantly over the last 4 or 5 years, and we're continuing to see that trend for now, even just beginning of this year.
Interesting. Yeah, just like every other asset class, right?
Yeah.
And maybe just one more question here. As I mentioned, kind of an opaque market, certainly not something I think about every day, but we do have a lot of wealth advisors, in our membership, so I think it will be a good topic. But what are some of the other questions that you get asked about the space?
Yeah, so probably, what's really been a big issue for some of these founding partners struggling with over the last few years is whether to implement an internal transaction and sell ownership to younger employees and younger partners, or do an external transaction and the questions and issues that come along with both of those. So on an internal transaction, of course, there has to either be some sort of external financing mechanism, whether that's bringing in traditional bank debt or other capital sources if those younger partners can't afford to buy them out. So that's been a big question. And then other parts of that is whether or not owner financing makes sense and if owners are willing to do that. And then on the external side, of course, people are wanting to make sure that they find the right merger partner, right capital partner, that they're making the best decision for their clients, their employees, and themselves. And so those really have been probably the two biggest questions a lot lately, have been how to execute on an internal transaction or an external transaction and what those both look like and the challenges for both.
Sure. Interesting. Yeah. So thanks for tuning in, everybody. Again, we'll have John here at the end of April in Chattanooga. It's going to be April 21st. It's going to be a lunch meeting from 11:30 to 1. Then the next day in Knoxville on April 22nd, also a lunch meeting from 11:30 to 1. So John, thanks again, and we'll see you in April.
Thank you. I look forward to it.